It's the world's biggest luxury company, valued at more than $400 billion, with some of the industry's biggest names under its umbrella. Dior, Louis Vuitton, Moet. Bulgari, Loewe, Tiffany.
It's definitely the dominant luxury player.
Absolutely the leader of the luxury goods industry.
Fashion, luxury hotels, media outlets, all under one roof. Led by one of the world's richest people.
LVMH touched the $500 billion mark, making it the first European company to do that.
So how did a young man's vision in the 80s lead him to founding Europe's most valuable company? And which of his 5 children will succeed him?
The story of LVMH is very interesting because it's the story of this company, but also the story of this man, Bernard Arnault.
LVMH, Moet, Hennessy, Louis Vuitton has soared to become one of the world's most valuable publicly traded companies, dwarfing its rivals Hermes as well as Kering, the company that owns Gucci, Yves Saint Laurent, and Balenciaga. The man behind the staggering increase in value is Bernard Arnault.
He gained the moniker the wolf in the cashmere coat, thanks to his high-stakes, take-no-prisoners approach that helped him win control of more than 70 brands.
But beneath the tough exterior was a leader with a vision. Bernard Arnault set out to build a luxury supergroup that would maintain many brands under one company.
The idea seemed foolish to many in the industry in the 1980s. How could one company hold many competing brands, and where would he find them all?
The first stepping stone of his business history, I would say, was Christian Dior. Christian Dior was a gem that he spotted that was part of a textile company that was going bankrupt. Bernard Arnault knew that Dior had the potential to become a brand that was going to become globalized.
If you look at all the luxury groups and specifically LVMH, there are ways of strategically transforming in the industry. And for LVMH, it was always about M&A, sometimes aggressive M&A. There has been a huge wave of brand acquisitions, the idea being to build a big group as fast as possible.
But the biggest and boldest of LVMH's acquisitions was American jeweler Tiffany's in November 2019. At almost $16 billion, it remains the luxury industry's biggest takeover. But it wasn't without its share of drama.
LVMH has said here and there that they were not particularly interested in that asset. So clearly it came out as a surprise.
So in 2020, COVID hits, and basically people are buying fewer luxury goods. They cannot go to the stores, they're stuck at home. At some point, there was a lot of tense and protracted negotiations. They threatened to go to court, and in the end, they settled.
When it completed in 2021, what we ended up with was a $16 billion deal, something which was 4 times anything we'd really seen in the industry outside of LVMH. But if we think about where both companies were, for LVMH, we think about luxury jewelry, so luxury jewelry was its smallest category versus the scale that it had across its other divisions. For LVMH with Tiffany, it really opened up the Asian market more in its luxury division.
LVMH's business strategy, together with a budding middle class and Asia's fast accumulation of wealth through the 1990s and 2000s, provided the prime conditions for the company's rapid growth and past successes.
What has happened in China in the last 20 or 30 years is you've had this increasingly large, wealthy middle or upper class who have been engaged in conspicuous consumption. That's been good for luxury goods.
What's so strong about LVMH is that you have a lot of economies of scale. Because they have so many brands, they're able to negotiate better leases with landlords when it comes to their store locations. And they not only own fashion or jewelry brands, but they also own distributors. And that's very important because Sephora will not be slashing prices on Dior products because that would be too destructive for the brand. Desirability is something that really keeps him awake at night. He's got to strike a right balance between selling a lot of these products without cheapening their perception in the eyes of the consumer.
In the last 10 years, LVMH shares hit an annual growth rate of about 20%. But the uninhibited spending on luxury goods stands in stark contrast to growing global inequality, making an escalating class struggle especially prominent and propelling an eat-the-rich narrative. In April 2023, French protesters stormed LVMH's Paris headquarters when President Macron tried to raise the retirement age from 62 to 64. That very same day, shares for the company had reached a record high.
Luxury today is recreating, in a sense, the idea of elite, the idea of masses, the idea of a lifestyle that everybody wants to share.
Headwinds from a global economic downturn are also emerging.
this sector was priced for perfection. Just one little cloud in the sky, just one shadow on the ball can actually create this market rout.
Obviously, the consumer is key to the big luxury brands, and the consumer is sort of reluctant to spend right now.
Potentially trading LVMH, it makes some sense because there is a reopening consumer-driven trade, although that's already fizzling, it would seem.
LVMH is particularly exposed to political and economic swings in Asia, with 37% of its revenue in 2022 generated from the region. In May, billions were wiped out when a slew of economic numbers pointed to a fading recovery in China, largely credited for driving the industry's rally.
The Chinese economy, the economic recovery is sputtering.
You don't have any concerns about China's slowdown at the moment for luxury?
There were always concerns for the world. And finally, our activities are growing very well for many years. So I am optimistic.
For all his optimism, one unanswered question remains. Who will lead LVMH after Bernard Arnault, now in his 70s, retires?
In this real-life succession scenario, the world is kept guessing which of his 5 children will take the reins, as they all assume bigger roles in LVMH. Here's who's who in the Arnault clan. There's the eldest, Delphine. She's the head of LVMH's second biggest fashion brand, Christian Dior. His second, Antoine, the most public-facing executive among the siblings, oversees LVMH's image and public relations. From his second marriage, Bernard Arnault had 3 more children. Alexandre is the head of products and communication at Tiffany. Frédéric heads the watch brand Tag Heuer, and the youngest, Jean, is in charge of developing Louis Vuitton's watch catalog.
One of the interesting things about the family is that they make a point of meeting once a month at the LVMH headquarters here in Paris, where they have lunches and they discuss everything from business to personal matters.
It's a nice relationship, and working with your family is very pleasant. Now, being the son in a family such as mine, of course, is a great responsibility.
Even with his children in leadership positions, it doesn't look like Arnault is ready to retire just yet. In 2022, LVMH shareholders voted to lift the age limit of the CEO, i.e. of Bernard Arnault, from 75 to 80.
I feel that that's already built into share price. I think that the market overall expects at some point he will go. Versus some of the peers, most of the peers, LVMH is very well placed for succession.
Arnault, via his holding company Agache, owns 48% of LVMH's share capital, but has almost 64% of the voting rights. The ownership structure was tweaked in 2022 to ensure the Arnault family retains its control over the luxury goods conglomerate for the long term.
What I think is really important today is that once you have your whole family set up, trained to the business and to the family house, they stick together against the enemy, anyone who's not part of the family and who would like to have stakes in the company. The idea is to have a family community that is going to stick together to avoid any type of intrusion.